Hey everyone, and welcome to this explainer. Today, I'm going to be your personal mentor for tackling the brand new 2025 Schedule 1A No Tax on Overtime Deduction. Now, I know tax forms can sometimes, make your eyes graze over, right? But I promise you, this is going to be incredibly easy to understand. We're going to walk through this entire thing together, step by step, so you can keep a whole lot more of your hard-earned money. Okay, let's dive into this. Here is our roadmap to guarantee you feel confident filing. We're going to cover the new overtime deduction, what actually counts as qualified overtime, where to locate your numbers, the deduction limits and phase-outs, filing a real-world 60K example, and finally, finalizing your Form 1040. All right, Section 1, the new overtime deduction. So to actually get this fantastic new tax break, you've got to familiarize yourself with a brand new form for 2025. It's called Schedule 1A. This is a form that you'll attach directly to your standard two-page Form 1040. Now, Schedule 1A handles a few different things like no tax on tips and car loan interest, but for our explainer today, we are strictly focusing on the overtime deduction and exactly how you attach that bad boy to your standard Form 1040. Moving right along to Section 2. What actually counts as qualified overtime? Honestly, this is the absolutely crucial definition you need to grasp before we do any math. The deductible portion of your overtime is strictly the half part of the time and a half you work over a standard 40-hour week. Think of it like this. Let's say your base pay is $20 an hour, and your overtime rate is $30 an hour. You do not deduct the full $30. Nope. You only deduct that extra $10. That specific $10 premium is your deductible overtime compensation. And this brilliantly illustrates a really common point of confusion, the difference between time and a half, double time, and premium time. Let's say your employer pays you double time. Your base is $20, but your double time is $40. Well, unfortunately, you are still limited to just the half of standard time and a half, so you still only get to count $10 per hour for the deduction. And what about premium time? You know, if you get extra pay just for taking a Sunday shift, regardless of your total weekly hours? Yeah, that is not deductible at all. It is strictly tied to hours worked over 40. Section 3, locating your overtime numbers. Okay, so now that we know what qualifies, we actually have to find your exact figure. I know it can kind of feel like a bit of an IRS treasure hunt, but the map is actually pretty simple. With just a minute of research, you can usually track down your overtime figures explicitly written in your W-2 Box 1 or Box 14. If it's not separated out there, no worries. Just pull out your final pay stubs for the year, or honestly, just ask your HR department directly. They literally have the exact records needed to track down your qualified number. All right, Section 4, deduction limits and phase-outs. Now, what's really interesting about this data is how the IRS has established specific income ceilings for this benefit. If you file as single, your income phase-out limit, which you're going to put on line 17, is $150,000, and your maximum annual deduction caps out at $12,500. But if you're married filing jointly, those limits completely double. Your phase-out limit jumps to $300,000, and you can deduct a maximum of $25,000 of qualified overtime every single year. Let's move on to Section 5, filing the 60K example. Like I said, I'm here to be your mentor today. So let's actually walk through a concrete real-world scenario. Let's pretend we have a hypothetical married couple, and they have an adjusted gross income, or AGI, of exactly $60,000. You're going to calculate this AGI first on the initial sections of your main Form 1040. Next up, we need our second key number. Our couple went on that little treasure hunt through their W-2s and pay stubs, and bingo, they tracked down exactly $10,000 in qualified overtime compensation. Let's move to and see how this builds chronologically across your tax forms. Step 1, you find that $60,000 AGI on your Form 1040. Step 2, you pull up Schedule 1A and enter your AGI on lines 1 and 3. Step 3, scroll right down to the overtime section and punch in your $10,000. And finally, Step 4, we're going to move that total deduction right back over to your 1040, specifically on line 13B. But wait, what about those phase-out limits we talked about? Well, on line 17 of Schedule 1A, you do a really simple calculation to check if you're disqualified. The married limit is $300,000. You just subtract our couple's AGI of $60,000, and because they make well under that $300,000 ceiling, there is absolutely zero phase-out. That means their overtime deduction is fully protected, and the entire 10 grand flows right down to the bottom of page 2 of Schedule 1A, sitting beautifully right there on line 38.
And that brings us to Section 6, finalizing your Form 1040.
We are in the home stretch. We've got our deduction calculated, so now we just need to apply it. So the crucial point is knowing exactly where this number lands so it actually counts toward your tax break. You take that $10,000 from line 38 of Schedule 1-A and you enter it right back on your Form 1040, specifically on line 13B. This is the line that's specifically labeled for additional deductions.
Now, I want you to keep this number in mind, $31,500. That is the standard deduction for a married couple filing jointly this year. Usually, folks just take this standard amount and move on with their lives.
But here is where we get to celebrate a huge win. The final impact of all this is that your $10,000 overtime deduction is added directly on top of your standard deduction. It doesn't replace it, it literally stacks. By adding these two together, you are massively reducing your taxable income, officially shielding 10 grand of your hardest-earned money from federal taxes. How amazing is that? Which leaves us with one incredibly exciting question. How much of your hard-earned overtime are you going to claim this year? Now that you know exactly how the Schedule 1A works, there is absolutely no reason to leave this money on the table. Go look at those W-2s, talk to your employer, and go claim what is rightfully yours. Thank you so much for joining me for this explainer. Stay focused and happy filing.